China's been extremely positive. We're back to 2019 levels across a whole range of mine commodities for China, and as you know, China represents between 50 and 60% of global demand. So extremely positive in terms of the global outlook for a number of commodities. However, the real concern is the world outside China and the phased unlock and indeed lockdown position.
Julian, do you want to get into that when it comes to the iron ore price? Because clearly a disconnect between what we're seeing on the ground in China, where there's been reports of more steel production taking place, a drawdown in those iron ore inventories, and also more demand for shipments coming into the country, versus what looks to be a very pessimistic assumption on the iron ore price.
Yes, I mean, if you think about the behaviour of iron ore, it's absolutely bucked the trend. It appears to be able to defy gravity, and the question is for how long. Now, of course, there's a couple of technical factors that have influenced the iron ore price during the pandemic. One in particular is Vale's production problems, and that has helped to boost the seaborne trade and indeed seaborne price into China. But the trajectory going forward is very much downwards, despite the recovery in hot metal production in China. So we anticipate that prices will end second half of the year around $80.
Julian, clearly some issues on the ground in Brazil, and it's been reported that maybe it's COVID-19 that's impacting some of that production. But across the world, you can say there will be impacts from coronavirus that may benefit some producers versus others. I want to get to what this means in terms of the behaviour of some of the big mining giants, because what we've seen in recent years, the balance sheet has been the priority. You've seen them really tone down the M&A behaviour, trying to ensure that their balance sheet is in a very strong position after being spooked a couple of years back, as you saw a decline in those commodity prices. What happens from here? Because already Rio Tinto has suggested it has a watching brief on M&A. It might be more active in the market. Do you think we will see some consolidation?
I think it's highly likely because, as you said, the major multi-commodity mining houses have very, very strong balance sheets, boosted in particular by iron ore. And whereas there are huge issues with organic growth, we think acquisition could be the way that the major miners buy their growth. It doesn't help the industry as a whole because some producers do actually need to press the button on expansions to meet needs going forward. But mergers and acquisitions absolutely on the cards, we think.